Trading is a mind game. Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. Fix your mind, fix your trading.
What is the TP family, and how do you become part of it? Don't worry, if you're watching this, you're already part of the TP family. Now, before you ask, no, it's not take profit. That's the first thing traders think, right? TP stands for trading psychology. When Cliff Cheqona created this community, he didn't want to make it all about himself. He wanted to create a space for traders built around a simple truth. Most traders lose because their mindset isn't ready for success. So what's the TP family? It's not a company. It's not an organization. It's a movement of traders who are done chasing shortcuts, done trading emotionally, and done feeling like they're alone in this journey. Now, let me be clear. We're not here to build another Telegram or Discord group. You don't need more chats or endless notifications. All you have to do is follow our content on YouTube, TikTok, and Instagram. That's where we deliver everything. Masterclasses, podcast clips, mindset tips, and even those hard truths no one else will tell you about trading. Our vision for 2025 is simple. Education. We teach traders what really matters, not just strategies, but the mindset behind them. Through our TP Masterclass, podcasts, and content, we make sure traders know how to manage themselves first. Community. The TP family is all about connection, but instead of chat rooms, we meet through meaningful content that actually helps you grow. Tools. We're creating journals, simulations, and practical resources to help you track your progress and improve your trading behavior. The TP family is here to change the way traders think forever. We're not about quick wins. We're about creating strong, resilient, unstoppable traders. Welcome to the movement. Let's make 2025 the year you fix your mind and fix your trading.
Hello TP family, my name is Tenzin Shells and welcome to the Trading Psychology Masterclass right here on YouTube Live. Today we are not just talking about trading, we are learning how to think better, how to trade better, and how to make better decisions in your trading life and in your life in general. At Cheqona here, we believe that wisdom, discipline, and faith are the keys to success, both in the markets and in your life. Our goal is to help you develop the right mindset, build confidence, and trade with much more clarity as you are now. Every live stream, you are here to learn and transform your mind, both in the markets and in your life. Our goal is to help you develop the right mindset so that you can achieve financial freedom and personal growth. So here's what is coming up your way today. A simple but powerful trading psychology lesson, how to find your edge in trading, and quick look at the charts and our book summary of the month. We will be recapping another chapter of the psychology of money, and there's a lot more to learn. So make sure to grab your pen and your notebook. And if you haven't already, share this link with someone who needs it right here, right now, this moment. Now, can I know where everyone is tuning in from? Let me know where everyone is tuning in from right now. Wherever you are tuning in from, just let me know. We have Charles from Luxembourg. I think it's Luxembourg. We have Nigeria, and We have Germany, we have Benin Republic, we have Northern Ghana, we have Nigeria, we have another Ghana. Yay. um, Uganda, Tanzania. We have someone from Russia. Yay. Welcome, everyone. Nice to meet every single one of you. And more. Oh, Namibia, Jamaica. Wow. We are global, you know. The TP family is global. Well, welcome, everyone. Welcome, everyone. Today's live session is going to be an amazing session. So thank you for joining the live session today, and stay tuned for more. Thank you, everyone.
Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind.
Okay, I think we're live. Good afternoon, everybody. Before we start, I just want to make sure everybody can hear me. If I can get some ones, something in the chat, just to make sure somebody can hear me. Beautiful, beautiful. All right, welcome everybody. Welcome to TP Family. Today's my first week starting it off, so I'm really excited. I wanted to jump right into the book summary. If you guys remember last week, we did chapter 6. Chapter 6 was about tail events. That was about benefiting when things are beneficial for you too. This week, if you guys read chapter 7, the point of chapter 7 was about freedom and money as it relates to freedom, right? Because they're two different things. So the point of chapter 7 is that the greatest form of freedom of wealth is freedom, right? People usually chase money because what they want is the freedom that comes behind it. The true wealth is not about the money. It's about having control over your own time. So not allowing other aspects to dictate what you want to do with your time. I guess I should have, before I start, I should say thank you to everyone showing up. I saw when Shells was asking all the different countries that you're tuning in from. I'm very excited to be speaking to everybody. But we'll continue here. The topic is The ability to wake up and decide how to spend your day, that's the real financial success. That's the real freedom from money. People don't really want that. Let me actually present. I have it here. Perfect. Thank you very much. So yeah, back to the topic. So people chase material wealth, but in reality, the real wealth comes from the freedom that that money would provide. I'm going to give you an example of how this relates to trading. So if you're a trader who's financially stable, you don't have to chase anything in the market. You're able to look at the market objectively and wait for opportunities to come to you. That's the real freedom. You have the ability to be patient and let an opportunity form before you jump into it, as opposed to someone who needs the money to make a decision that day. They have a bill to pay that day. And now, just from the beginning, as soon as they get onto the chart, they're already in the wrong state of mind. Go to the next one. Go to the next slide there. Thank you. So yeah, and we're talking about risks, right? So when you have that freedom, when you have the ability to separate the things that you want to do from the things that you have to do, you no longer have to be forced or backed into a corner to make decisions. So I want to ask you guys a question: are you working towards financial freedom, or are you trapped in a cycle where money controls you? You guys remember one of the very most important points about 2 or 3 weeks ago that Cliff spoke about was your money thermometer, right? So everyone has a different money thermometer. It's going to dictate how much money you can keep, how much money you can make and hold. So there will be different cycles in your life in which you come into more money or you lose money. And no matter what happens, you will always return back to that even point, that equilibrium in your money control. Uh, if you have sustainable and healthy money habits or psychology habits, really is what it comes down to. If you're a disciplined person, then you will be able to identify and free yourself from the cycles of these up and down situations where money comes into your hands and leaves your hands, and vice versa. You can go to the next slide. The importance of defining enough. This is very important. So you guys read from the chapter. Chasing money endlessly can actually reduce the quality of life that it takes away from your time freedom. That it's never been truer than trading, right? How many times have we been in a trade and we're already in a profitable trade? We can simply take the profit, we can put it at break even, we can close and be done with it, or we can go about our business and not look at the chart, right? And not look at the screen. But many times, because we're depending on that money, we're making decisions based on fear and not based on logic or reason. So we'll go and mess with the trade, we'll close it early, or we'll jump into another trade. We'll allow the information that the screen is giving us to make decisions that we didn't predefine as smart decisions. All of this comes from not having stability in your own financial situation. There's a good example of surviving here. So let's say there's a trader making 10,000 a month, right? $10,000 a month, but living within his means, versus a trader making 50 but spending 55,000. I think that's the best example. Sometimes we're not happy with what we have. We can make 10% in a month, and that 10%, because it's 10% of a small amount of capital, we fail to see that it's still 10%. And the 10% is a very good return to make on an account. And many traders want to live up to this glorified idea, especially on social media, about what trading is or what it should look like, that they're willing to live above and beyond their means, adding more stress to themselves and making it even harder to stay trapped in that cycle. As compared to that trader who makes the $10,000 a month and they're content, they're happy with enough, and they understand that that 10,000 will provide a living for them and that they don't need to live outside of their means. So I want to ask you guys a reflective question, and I'm going to wait and give you guys some time to give me some answers. I want you to be honest with yourself. If you hit your financial goal today, would you stop or would you keep chasing more? I'll pause for a second now. We all deal with this. Even me as a trader, I've been trading a long time, and sometimes I'm in and out of the market in minutes. You know, I plan a trade for 2 hours, and I'm in and out in dirt, whether it's a stop loss or a take profit, but I'm in and out in 10 minutes. This is where that matters. Would you stop or would you keep chasing more? Right. Fauci said, I will keep trading. Exactly. That's the reality. So what that is a sign of is that you're not content with enough. You traders who chase, essentially you're communicating that you have a higher attachment for the act of trading. You have a higher attachment for pushing the button than you do for the result of good trading. And that's a cognitive bias that we need to fix. We're gonna go through things like that in this TP masterclass. Cliff definitely has us with that type of insight. You can move on to the next slide, please. Freedom is the highest form of wealth. Money should buy time and options, not just material things. So that goes back to what I'm saying about social media nowadays. Trading has been depicted on social media to be all about the material things, sometimes about the time freedom, right? You see people traveling and doing things that they love, but a lot of times people are distracted by the material wealth and not understanding that if you have to work a 9 to 5, you work a certain amount of hours to make a paycheck and you use that money to pay your bills, then you're essentially trading your time for the money that you need to survive to pay your bills. If you can detach and realize that trading will give you more for that same amount of time than your 9 to 5 will, then you realize that they're two separate opportunities and you have to respect the opportunity of trading in a different light. Because in trading, you have the infinite potential to scale. You have more potential to scale more money, to make more money for the same amount of time that you spend. Now, in most people's jobs, unless you do sales or something to that nature, the amount of time that you work and the amount of money that you make will always be equal, right? You can't wake up one day, work the same hour today and make more money today than you did yesterday in that same hour in a regular job. In trading, 1 hour can mean, $10 or it can mean $100. So it's never been truer than in trading. You have to understand that time freedom is the goal. That is what we chase as traders. That's the reason we decided to become traders, is because of time freedom. So if you don't focus on that, you will lose sight of what you're trying to accomplish and you will focus instead on the actions, such as pushing the button as opposed to the result, which is buying back the time from your job, right? You're essentially buying that time back so that you can spend it on other things. Knowing what is enough can help you reach financial freedom faster. There's many times that people start trading, they move into a chart and they don't even know what it is that they're trading for. They have no higher purpose, no bigger goal that's outside of themselves to get them out of bed, to get them in front of the chart. Okay, I want you to move to the next one. Okay, final reflection. So just to recap, think about your financial goals, not in terms of how much money you want, but how much control over your time and desire, your time you desire. I want to bring up the comment. There was a comment. Could somebody bring that back up here? Here we go. Right, you don't need to trade every day to be profitable. So that's a very very important point. That all lends into the conversation that we're having, and what the book covers. I think that. Thank you. I think that holds true for traders more than anything else. I can tell you, as a person who's been trading for a very long time, knowing when not to be in the market is the best gift you can give yourself, because you're saving yourself the headache, you're preserving mental capital, and you're letting yourself see the market on a different day, right? See opportunities on a different day. When you are relying on trading, and if you think about it, many people have not made a withdrawal or are not consistently pulling money from their account, but they'll still sacrifice time to be able to lose money in their account. So they're taking two losses. They're losing the time freedom that they could be spending elsewhere, and they're not actually making a return on their account. But in our minds, we think that productivity is taking action. So we will open our charts daily. We'll look for opportunities daily. We'll purchase another prop challenge account despite the amount of prop challenges we failed. So we engage in the same cycles, in the same trapped behaviors in order to free ourselves, when if we realize that if we work backwards and standardize our approach to trading, standardize meaning we have a plan every single time. We know what a good day looks like versus a bad day. It makes more sense, and it will give you more traction in the future to be able to know when to stop, when to push, versus not understanding, right? And being trapped in the same cycles. You blow an account, buy another account, trade the account. Something goes wrong in the plan, you blow the account again, and you're stuck in the same trap. So if you think about this, the reason you're trading is to free yourself from whatever's holding you back, whatever job or 9 to 5 you might have, or to accomplish whatever dreams you might have. That's the reason you're trading in the first place. But if you don't standardize your approach to trading, the only thing you're actually getting from it is you're putting yourself in a cycle where you're spending more time and more money. So in order to fix a problem, you're causing another problem. I hope you guys understand what I'm getting at when I say that. So you create a problem by trying to fix a problem if you don't standardize your approach. Pretty much that was the idea that chapter represents. I think that it ties in hand with trading the best, and with the lesson that we learned last class about tail events, about being able to identify opportunities when they're in front of you. That couldn't even be true if you don't have the proper financial thermostat, or if you have financial stability, because how can you reach for an opportunity when you're essentially in survival mode? That's the idea that I wanted to convey to you guys today. So before we move forward, I wanted to ask you guys if you had any comments, any questions on that, any feedback. You guys could drop it in the comments. Take a look. 2 trades per week. Yes, very good. Virtuoso. I love that. Which after 2 years learning, but you are now getting. Okay, that's a great question. So one thing I will say is there's the number one golden rule of investing. You only invest money that you're not afraid to lose. So for starters, the reality is, although I do believe that trading and investing is for everyone, you have to be realistic with yourself. And if you don't have some amount of disposable income, you're essentially setting yourself up for failure, because you are relying on the money that you just deposited to trade. You are also relying on that money for something else. So from the very beginning, you're already psychologically attached to the outcome of that money. And that is the wrong place to start trading from in the first place. So what I would say is that it doesn't cost you money to learn the discipline and the skills required to be a good trader. Because as a trader myself, I can tell you the majority of time that I spend is not in trading. Pushing the button is not where I spend the majority of my time. I spend the majority of my time working on my mind, working on my body, doing analysis. I rewatch screen recordings of my own trading, so that if I ever make a trading error, I'll be able to rewatch and see myself. If I put a larger lot size than I'm supposed to, I'll see myself, right? So I spend a lot of time watching my own tape, and that's how I improve myself. I spend very, very little time staring at live charts or executing trades. And it's very free to watch your trading behavior. Patience or discipline to follow it. Yeah, absolutely. That's very true, Fauci. Worst feeling is, man, that's nothing has been truer, right? Because you can see within grasp, you can see that the system would work. You've played it out a million times. Maybe you've seen someone else use that system and it works, or maybe it works for you in demo. But there's always a disconnect when you bring your own decision making into that process. So yeah, guys, I definitely want to keep going into these topics. It's very, very interesting, and it's a great combination of psychology and what it means to be a trader. But moving on to the next segment, I want to bring in Kema. Kema's going to cover Edge. I believe that's the next segment coming up. And yeah, I appreciate you guys. Let's keep reading the book. And thanks a lot, TP family. Next up, Kema.
Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Trading. Fix your mind, fix your trading. Fix your trading. Fix your mind, fix your mind. Fix your mind.
Hello, wonderful people out there. It's Chemotrates right here. If you can hear me loud and clear, I just want to see some ones in the session. Just some one, give me some ones to know that you can hear me perfectly. Anyone giving me some ones? Great, great. All right. Awesome, awesome day. It's great to come back on the TP family. It's great to have you all join us once again. Today, we are going to do something really interesting that we started last week. We started with how to draw a trading plan, and then, like I gave an overview. And today, we are basically going on to the part 2 of how to draw a trading plan. And then there's also a part 3, which is going to be technical. So, definitely, I have a short time to present this. Let's get in on that. I'm going to share a slide with you so that you all can see and follow through on this. You can pen down some notes. You can revisit the session later on and then jot down everything that I have on the slide currently. So let's get the slide on currently. So basically, what is edge? When we talk about edge is simply one thing having the tendency of happening over another thing, like more times, right? So the tendency for one thing to happen over another thing happening. So in trading, we are looking to build our edge, means that we are looking to build our tendency for us to be able to keep making profits on the market than us making losses on the market. You want to be able to cut your losses short on the market and then make more profit on the market. Josh Soros said something really interesting. He said it is not about how much, like it is more about how much you make when you make profit on the market, and then how much you are willing to lose when you actually make losses on the market. So at the end of the day, drawing a trading plan is one of the serial ways, is one of the very important, significant, and also important ways to be able to beef up your edge on the market if you really, really want to make consistent profits on the market. That is why it is essential. And then I brought in this one. Let's get in on the slide and then let's take a look at what exactly we are to do today. So there are a few things that I want you to take a look at, right? When you are coming in to drawing a trading plan, I want you to look at what kind of win rate that you want to be having on the market. When it comes to a trading plan, you want to go to the very core. Everything matters on here. Everything. In fact, even to the point where what time you wake up to come to your chart, or what time you appear on your chart is even important. So you are looking at your win rate, you are looking at your average return per trade, you are looking at your maximum drawdown. Now, interestingly, you realize that it is only when people are trading prop firm accounts that they tend to look at their win rate and then the maximum drawdown per day, per week, or even per month on a trading account. But when it comes to their own trading account, they forget the fact that they can actually draw the same thing for themselves and have the discipline to follow through, right? So in drawing a trading plan, all of these are really important. Trade frequency and then all. Now let's get in on this. So I have drawn, like sort of a 13 pointer plan for you to follow in order to get this part of the trading plan out of the way. And then there's another part that will come later on, right? So this is a revised explanation to what follow through with me. Narrow down your trading instrument. So one of the things that you want to do is ask yourself, how many assets do you trade, or how many assets do you want to trade? There are several assets in the market that we trade from time to time. As much as you are involved in the forex market, you know that there are forex pairs, there are commodities, there are metals, like there are stocks. We are able to even trade a crypto market on the forex market. That is what makes the forex market very advantageous. And so coming into the forex market, you want to be able to select at least a few that you'll be focusing on. You can't just be in here and be trading every single pair, right? You have to focus on a few that you can master for yourself, and then ask yourself, why is it that I have chosen these ones to be able to focus on? So for instance, myself, I trade the gold market. Why is it that Kema started focusing on the gold market? I used to trade GBP USD, GBP JPY, I used to trade oil, but then I started focusing on what? Gold. Why? Because gold has the tendency of giving me what I need on the market in a short period of time. The volatility on gold as compared to all the other forex pairs is very, very high. At the end of the day, if you go to a pair like GBP USD, you can drag and then wait for a couple of hours, maybe 8 hours, like in tune, before you'll be able to even make probably about 100 or 150 pips on the market. If, like we are on a regular day and there's no market, like news. But on gold, gold relatively gives 100 pips, 50 pips, 150 pips, like concurrently. You can have gold move towards the upside and come towards the downside in a very short period of time. So I decided to start trading gold, since as a trader, what you are looking to do is to make profit on the market. And you cannot make profit, too much profit, that you are looking for on a pair that is stagnant, on a pair, or a pair that is relatively moving so slow, unless you are increasing the lot size that you are putting in on the market on that particular pair. I hope you understand. And I wasn't ready to increase my lot sizes. So I have my why I trade the pairs that I've chosen on the market. You have to also have your why you have chosen that particular pair. So that's the first one. Second one, I'm going to say, always analyze your assets. Now, it is true that most people do not know how to analyze the market. But interestingly, even looking at the price that your asset closed before you sleep is a way of seeing through to what, analyzing the assets that you have, so that you can be able to wake up to, like a perspective on that particular trade. Don't trade a pair that you have not analyzed or taken a look at upfront before, like you go in there. Right? That is one of the key indicators that I tell myself. I don't trade a pair that I've not analyzed forefront. If I've not analyzed it yet, I'll make sure that at least I'll take about 10 minutes. That is why I spent 2 weeks ago to teach you how to do a short analysis within the next 10 minutes on a pair before you actually endeavor to look out for highs and a significant lows that daily has created, weekly has created, monthly has created. All of this comes in play on there, right? Number 3, make sure you cut your losses short before they become debts. Most of you have had a very hard time cutting your losses on the market. And it is why these losses tend to become what? Debt. When I say the losses tend to become debt, it means that an individual who probably has $1,000 and that is all they have. They don't have, like extra income anywhere. They come into the market, and then the first mistake that they do is they put the entire $1,000 on there, right? They are risking money that they cannot afford to lose. That is the first one. Now, interestingly, these individuals, after putting that $1,000 on that particular price point, want to make excessively more on that particular $1,000. So what do? They end up increasing lot sizes on that particular $1,000. And guess what? When trade starts going against them, these individuals start, letting their ego get a better part of them, and then telling themselves that this market will come back to entry. This market is going to come back to profit. And sometimes market will keep on going and going and going. And so there is a saying that market can remain irrational more than you can remain solvent. The market can remain irrational more than you can remain what? Solvent. I'm going to give you a homework. Go and then look for the explanation of that. Next week when I come in, I'm going to ask you exactly what that means, right? Now, it is very difficult to cut losses, I know. That is why we set stop losses on the market and make sure that we are disciplined enough to keep the stop losses there. Now, the stop loss that you have set on the market is an order that you are giving to the broker that, hey, I'm willing to risk this amount of money on my $1,000. If it hits that area, please take out that amount of money from my $1,000. That's what I'm comfortable with losing. And then what? And then let it go. It means that I'm comfortable with how much I'm losing, or I should be comfortable with how much I'm losing. I should be disciplined, seeing through that I don't move that stop loss or what, make extra losses on the market. I hope you understand. So learn to cut your losses short. Then you know where to add on to winning positions. One of the things that a lot of traders do not do is to add on to their trading plan that I am going to learn how to add on to my winning position. So most people end up averaging their losses rather than averaging their profits. When I say averaging your losses, do you remember the time when you are placing a trade on the market? Market starts going against you, and instead of watching the market probably come towards your SL, you start adding on position or stacking against yourself. You start adding positions, as market keeps on going against you. You start adding positions and adding positions. By the time you realize sometimes market does not get into your stop loss point, and then you do what? You end up losing that trading account, or you blow that account, right? Know where to add on to winning position. Greed is what makes a trader enter multiple positions on the market in order to make more money than expected on that particular account. So anyone can have a winning strategy. However, it takes a different kind of skill to know your entries on a strategy that you are trading, right? Or even where to add on to positions. So this skill can save you from over leveraging your account, and then also sort of exercising unnecessary risk on the account that you are trading, from time to time, right? Now, number 5, I'm going to say generalize every single trade that you have in the market and rate yourself every single week. Now, this tends to help you measure your success rate. It tends to help you know if what market has started going against you at a particular period in time. For instance, the measurement of my generalizing every single trade I take has me realizing that in the past week I've probably taken about only 2 trades or 3 trades, right? And then, you know, like as compared to the previous weeks, I probably have taken more trades than what in the past weeks that I've taken. Now the question is, I sit down and ask myself, why is it that I've taken lesser trades within this period of time than, you know, like the previous month? But if you are not doing it, it means you are not keeping a track record, or you don't have any single track record penned down for you to go back to and then look at what your progress on that particular one, on that particular area. When I talk about generalizing, it doesn't even come across just trading, but generalizing your journey as a trader from what? From the point scratch. I have every single journal from the kind of PC that I started using when I began trading, pictures of it, and then, you know, like the spec of it, and then or until what exactly I'm using here. It's all part of it, right? It shows the kind of growth that I'm having, and every single gadget that I purchase comes from the profit that I make from the market. So I'm proud of what the journey that I'm on, and I'm proud of the profit that I'm making, and it shows that I'm making progress on every single turn, right? So now let's move on. When you panic on a trade, please let the opportunity slide. The market has been here and will still be here for more opportunities to come for you. The market will always be here. Don't let one trade mess up your trading journey. Most of you have made that particular, you know, or have come into that particular point where you have made one single trade in moment destroy, you know, an entire trading portfolio that you have built for yourself, and you don't want to have that. That is why you have to draw for yourself a trading plan that says that you should know what, whenever you panic on a trade, you are going to let that opportunity slide. When you panic on a trade, it means that you don't trust that trade enough. When you panic on a trade, it means that that trade is not doing what you thought it is going to do. It means that that trade should be cut off, and then let loose, and then let go. All right. Now, everyone can analyze a chart, but not all can trade. You have to master both. You have to be able to master the art of analyzing a chart, and then also master the art of what? Trading. Do not just analyze the chart and then what? Allow the trades to go. At every point in time in my life, because I generalize my journey, there's a point in time in my trading journey that I realized that, okay, I analyze the chart, price comes into that area, and I don't trigger the trade, right? So now I started asking myself questions. That made me get to know that, okay, so I could have 2 main entries criteria in the market. The first one is going to be a risk entry, whereby I have a point of interest that I'm looking forward for market to come into. Once market gets into that area, I'm going to just jump into that particular area with a stop loss beneath the range, and then allow that trade to run. That is a risk entry. The second one is once market gets into that particular price point or point of interest, I'm going to hold on and then look out for other confirmations, which means now I'm confluencing. When we say confluencing, it means what? Bringing into perspective more than one concept in the market before you pick a trade. So probably I'm looking at market structure, I'm looking at point of interest on the market structure, swing low, market comes into that area. Then I make sure I look out for a second eye on candlestick confirmations. That shows that there has been a slowdown in the preceding price action, and therefore it is time for price to turn around towards the direction in which I'm going. Then you'll find me piling in on that particular trade, right? So basically that would help you as an individual as well. Learn to do that. Now, number 8, I'm going to say risk only 1 to 3% of your equity. Most of you, because you want now in the morning times, you tend to hear the word flip a lot in the trading community. Everybody wants to flip an account from $100 to $1 million. Everybody wants to flip an account from $300 to, you know, like some outrageous amount of money in the market. It could be as a result of fulfillment that you want to have. It could be as a result of, you know, like wanting to make more money at a point in time. There are even people who make excuses. Oh, I have a lot of children. Oh, I have a family to feed, right? But these are the same reasons that I told myself, or that made me tell myself, guy, because you have a wife and because you have a child to feed and you have a family to take care of, that is the main reason why you should not even mess up this particular account. Because if you mess up that account and it goes away for good. And so it means that based on the same excuse that other people are making, it is based on that same excuse that I will be willing to do the right thing. At the end of the day, it's not what is at stake. It's the individual who is in the position to do the right thing, and then they end up doing other things. So make sure you risk 1 to 3% of your equity. Most traders blow their account before because they cannot measure their risk. Learn to measure your risk as a trader. Know the account that you're having and know what 1% of that account is or 3% of that account is, and then measure. Now, for individuals who have an account as low as $100, what I'm going to say is at least risk up to 5%. Why? Because mostly we are giving stop loss points of about 50 pips. If you have $100, if I give you 50 pips stop loss, you are using the lowest lot size on the market. That is 0.01. It means that you cannot stay within the bracket of 1:3%. Definitely, you setting that 50 pips stop loss is going to have you on 5% of a stop loss. I hope you understand. So at least you would be able to open up the margin to 5% of your equity. But as the equity grows, know what to do, and then just simply calm down to 1 to 3% so that you don't end up losing too much of your capital at a go. I hope you understand. Let's move on. Number 9, I'm going to say write down or pen down, define and accept what you risk before entering any trade. Now, what exactly I'm having here or what exactly I'm listing down for you are things that I've penned down and I'm using for myself. And I'm giving out to you so that you can actually look at those things and then also define it in your own way. I hope you understand. So define and accept what you risk before entering a trade. I always do that on the market based on my equity, because my equity either grows or my equity decreases in value. So at the end of the day, every time I'm going to enter a trade, I want to make sure that, okay, so based on this particular equity that I'm sitting at, this is how much I want to be risking on that particular trade, which means I could increase my lot size from when I was using last week, or I could decrease the lot size from the loss that I've made currently, right? Then we move on to the next. Risk benefits, which are profits, should be nothing less than your risk that you put on the market. Now, I don't know how many times, I have to say this, but there are people who do not even know how to manage their risk as compared to the profit that they are looking to have in the market. What you want to do is to be able to manage that and then know how much you are risking on a particular trade, whether it is percentage-wise or monetary-wise. If it's percentage-wise and you are risking 1% of your account, then that means that you need to be looking out for 1% in return on your account or more. That is why we would say 1:1 risk to reward. 1:1 risk to reward simply means you are looking out for having exactly how much you risk in the market in the first place, or or more. Or more means 1:2, 1:3, 1:4. It means if I risk $100, 1:2 means I'm looking to have twice the amount of money that I risk on the market. A good risk to reward is one, a good risk to reward is one of the major components that keeps top traders in the game. Once your risk game is good, your wins will always cover for your losses, even if the losses are slightly frequent than the profit that you have in the market. What that means is, even if you are having 10 trades at a go and you are making losses 6 times in a row, your 4 trades can relatively cover for the 6 losses that you are making in the market if the risk reward is relatively good. Never let a winning trade turn into a losing trade. I don't also know how long I should stress on this. I'm always trailing my SL to entry the moment I have a target hit in the market. I tell myself, if I'm going for TP2 in the market, 1:2, 1:3 risk to reward. The moment market hits my 1:1 risk to reward, I'm going to throw my SL back to entry. Sometimes it is based on price action that I throw my entry, SL to entry on the market. After a break of the nearest structure area, I know that, okay, if there's going to be any pullback, that pullback might not necessarily come all the way back to entry. And then I throw my SL to entry. Now, guess what? There are sometimes that after trailing the SL to entry, market will come all the way back and hit me out of my entry. Does that mean I'm going to clean that part and then say, I'm never going to throw my SL to entry? No, it's a criteria for me and I have to follow it. Even if often more than not, price is going to go in profit, come back and then take me out of entry. It is better than seeing price come all the way and taking me back into a losing trade when I've already seen at least TP1 profit in the market, right? So learn to accept break even when a trade puts you in profit but retraces its way all the way back to entry. There are individuals, the moment they see that they have made profit and it's coming back, they tell themselves, I don't really want to lose this amount of money. I saw maybe $100, I saw maybe $1,000, and now price has retraced all the way to 100. No, it must go back to 1,000, right? Learn to accept break evens on the market. And then number 12, trust your trade completely. Of course, I don't know why you are going to go into a trade that you don't trust, or halfway, you don't really know what exactly you are doing. Have a criteria for yourself. Tell yourself, okay, so this is what I'm looking at. It means that if you are picking a trade, it must check every single criteria that you are looking for on the market. Confidence in anything you do shows how well versed you are in that area of operation. When you begin to trust your trade, you allow that trade to run regardless. And one of the ways to build your edge on the market is to exercise whatever you are doing on the market and allow it to play through before you actually touch that particular trade, or allow it or interfere in how exactly it is running. It means that if you have, it means that if you have the, a plan, right, to follow, what you are basically looking out for is for it to go through. You don't want to come in play and then say, okay, so because I have this profits running all the way into this region, and then basically it has not gotten to that area, but I want to cut it short, right? Of course, you have to have a criteria that you are looking at along the way, right? Important to note for all the beginners who are in here, finding one's niche in the financial market consists of more than mere interest. It is more than mere interest, right? A trader needs to sidestep the chaos, not only on the market, but outside the market, from all the other trading geniuses, who are out there. Now, you must be able to step out of the zone in order to uncover that hidden determinism in seemingly random markets, right? Sometimes things are really simple, but people complicate things for themselves. And it's not everything that is for everybody. And so maybe complication is good for me because it challenges the way I see things, but it might not necessarily be good for another individual because it confuses the person altogether. That is why trading is a marathon, and you need to set the pace for yourself and follow through on that particular journey for yourself. The market communicates with every single trader, and to succeed in the market, you must learn to listen to the market and respond to the market. Now, that is how all the other trading geniuses that we talk about today mark their names in the history book of Forex. They listen to the market, then they pen down the principles, that they got from listening to the market, right? They pen down those principles and they have passed down those principles. And when I talk about trading geniuses, I'm talking about the George Soros, I'm talking about the Stanley Druckenmiller, Andrew Krieger, like Ray Dalio's, these top geniuses, in the market, right? We have had most of these individuals, but the question that I'm going to ask you is, have you read some of their exploits? Have you read some of their journey, to know how exactly they maneuvered certain kind of things that came their way, difficulties that came their way, or even how they maneuvered certain kind of profits, bountiful profits coming their way in the market at a point in time? You need to actually get in there. We will come to the part 3 of this particular trading plan. That one I'm presenting you with an actual trading chart to see how exactly you will mark out the pair that you are trading on the market, what kind of pair that you are trading, the timeline that you are trading that particular pair, whether you are buying or selling in the market, and then whether your trade was profitable or not, how many pips that you had on that particular trading, on there. It all has to do with you having a trading plan and penning down every single trade that you pick so that you can relatively visit this particular trading, opportunities years down the line when you want to. Thank you so much. My name is Kema Trades. I will see you next week again. I'm handing over to the next segment.
I think big, I dream big, I trade smart. My thoughts align with wealth, success, and abundance. I deserve success because I work for it and stay disciplined. I let it go of doubt, I let go of fear. My mind is renewed every day with wisdom and strength. I focus on solutions, not problems. I attract profitable trades and opportunities. I am a successful, focused, and profitable trader. I am unstoppable and I am victorious. I am grateful for every opportunity to trade and grow. I give thanks for my progress, my lessons, and my success. I attract prosperity and I steward it wisely. Every day, I am becoming a better trader. My trading provides freedom and abundance. I speak life, blessings, and success into my trading journey. I am grateful for the wisdom to manage risk and profit. I celebrate my growth and resilience. My heart is full of gratitude. My mind is at peace. I am prosperous in my thoughts, my trades, and my life.
All right. Good evening, everyone. If you guys can hear me loud and clear, just drop some number ones in the chat for me. Another week, another powerful contribution from the whole team. Before we even go on, let me start by honoring each and every single person here on the live. Can I know where each and every single person is tuning in from, if you don't mind? Can I know where you're tuning in from? Let me just say hello to the TP family a little bit. If the media can bring up where they are tuning in from on the screen, I really appreciate it. Let me just say hi and hello to one or two people. Zimbabwe, nice to meet you. Leslie, I hope you are doing well. Germany in the house. Michael, nice to meet you. Who else do we have out there? Nigeria in the house. Sam Trace, nice to meet you. Port Harcourt, Mensa, nice to meet you. Mensa from Port Harcourt, amazing. Mensa, you must be Ghanaian, no? Who else do we have out there? Rwanda in the house. Marky, nice to meet you. Nice to meet you guys. Haiti, Jeffrey, nice to meet you. Amazing, guys. I really want to just take the opportunity to thank you all for tuning in as always. TP family, we are growing every day. And it can only be God, because many years ago when we started this journey, it didn't look like this. It looked like we're saying nonsense until people started listening. It was unusual to teach somebody something about trading, and when you don't show them trading view, they are asking themselves, am I learning trading? Yes, you are learning trading. It's because of the way you see it was why things were not changing. But now I'm glad, and we give God all the praise that people are growing into this understanding that trading is really about how you view life in general. Before we go into today's topic, I want to first of all start by saying that as you guys can see, majority of the team, in fact, almost all of us are in different environments. For example, you guys know Ivan, he is all the way in the United States. Kema is all the way in the motherland, my brother. We have Shells all the way in the UK. We have Willis also in the UK. Now we have different people in different parts of the world. And so sometimes because of the time zone, I'm here in the UAE in Dubai, and it's currently 10 p.m. And sometimes, we finish these master classes around 1 a.m. around my time. And one thing I want you guys to bear with us is that, I just want to say thank you to the team, because even though the time is not the same, and sometimes, some of them are either about to have their dinner, about to have their lunch, their breakfast, they still jump on these live streams. And, they do this because of the love they have for the community. So I just want to take a time and let them know that I don't take this commitment for granted. For example, right now that we are doing this, you guys can tell some of you guys are streaming in from India, some of you guys are from Haiti, some of you guys are from different part of the world. We saw Russia and so on and so forth. So I just really want to honor each and every single person, but I want you guys to help me to say thank you to the team with the effort they put in regardless. And at the same time too, I want you guys to bear with me that because of that, we will have some technical and internet issues from time to time again. It's not going to be like this forever. And in fact, I have good news for you guys as well, something I want to share with the community before we go on. But first of all, I just want us to just drop, anything in the comment that you want to say to the team for week in, week out, this effort they bring on board as well. Now, there is some good news, and I want to share with you guys before we go on to today's topic. Two things. Number one, as you guys already know, we started a 90-day challenge in the TP family. Now, some of you guys, we had so many submissions, and I want to start off by apologizing. We had so many submissions, but unfortunately, the systems we have right now, because it's a one-on-one interaction and one-on-one monitoring, the systems we have right now cannot take more than 100 people. Unfortunately, we can't take up to 200 people plus. So we couldn't get everyone. At the same time as well, there were people that also didn't qualify. So if you didn't hear from the team or you didn't hear from me, that is the reason why. So we just really want to apologize on that first. Secondly, if you have been going through the screening, just be patient with us. We are onboarding people step by step. So keep your eye, on the group. The second thing I want to share, the second good news is that 2 Sundays ago, after church, I just had this leading in my spirit that we should start TP Masterclass physical here in Dubai. And I didn't want to do it because I was like, why would I want to do a physical TP Masterclass when we are doing online? And so I left it out of my head. And then long story short, I made a call to an individual that I know here in Dubai. And I said, look, this is what is dropping in my spirit. This is the vision of TP Masterclass. I need a place to be able to, do this masterclass. Where can I go? I need to know. And so he said, Cliff, don't worry. Just give me a second. Let me make some calls. He got back to me, I think a day or 2 later on and said, Cliff, guess what? I said, what? He said, I have good news for you. I spoke to an individual about your vision, and he is so happy that he just wants to give the TP family a space in Dubai. I've seen the place, and we'll share with you guys later on. Beautiful place that we are going to be using to be having TP Masterclass physically here at Dubai. Now, at the end of the day, it doesn't mean it changes what we are doing now. Same thing, but right now, other TP family members live here in Dubai will get to walk in every single week and have a face-to-face encounter with the masterclass. If you guys are excited about this, just let me know in the comment section right now. This is some good news. God has shown us favor in every single thing that he said he's going to do. People are growing, and we just thank God that this is happening right now, to the community. So I just wanted to share this with you guys because you are part of the family, so that you guys will know exactly what is going on in the community and so on and so forth. Now, with that all being said, last week we spoke about something very powerful, and I titled that emotional intelligence. And if you guys remember, we started off by talking about the foundation of emotional intelligence. If you missed that masterclass, I will highly recommend that you go back again right after this session and go watch that masterclass. And now somebody may ask me, Cliff, maybe this is the first time that you are hearing about what we call TP family and so on and so forth. And you may be asking, Cliff, what is a TP family? You may have heard me say this before, that TP family is not a company. TP family is not what else? It's not an organization trying to, strip off things from people. TP family is a community. It's for everyone. If you are a trader and you believe that trading is more than just technicals, you are part of the TP family already. I just had to have the opportunity to be able to have the idea by the grace of God and say, hey, let's do it this way. That is why you will see Kema, who has his own community, in this industry, and yet he comes on this platform, without any sense of, thinking twice and want to deliver, pour out his heart for you guys. And so everyone is part of the TP family, as long as you understand. But you may be asking yourself, Cliff, what is TP family? It simply means trading psychology, not take profit family. I mean, that would sound nice, but TP simply means trading psychology. Now, trading psychology, when you talk about it, people are thinking it must be something very crazy. No, psychology simply means me studying a group of people, or you or myself, my mindset and my behaviors. So trading psychology simply means the behavior, the mindset behind how you trade, as simple as that. And while I am studying it, while you are studying yourself, while you are getting knowledge and understanding, you are growing. So that is TP family. So every single person coming together, we believe that trading is a mind game. But then in terms of this community specifically, there are 5 pillars, and I want you guys to write this down, please. Okay, I want you guys to write this down. there are 5 pillars of the TP family. So when you go somewhere and somebody asks you, when we say TP family, what is that? Why do you go in every single week listening to this guy? Why is it that you have to go and sit on a call 2 hours? Some of you guys are watching some of these master classes 2 hours, twice or 3 times in a week. And I see the comment. And sometimes when I get a time, I reply. So in order for you not to speak ignorantly about what TP family is, I want to quickly just run through the whole 5 pillars of what TP family is. Number 1, I want you to understand who we help. Number 2, what it does. And number 3, who they become. Who is the who? So who and what and who again. So who we help, what the TP family will do for you, and what we want you to become. If you don't see the goal, nothing will change. I want you guys to listen to this carefully. In driving any car, when you are driving a car, one thing you need to understand is that the light of the car that you are driving with, okay, that light, it doesn't go all the way from your destination, which is from your house, to another destination directly. It goes in meters, let's say 300 meters, let's say 200 meters, depending on the light. So between your house to the 200 meters ahead, that is how far the light can shine. But it doesn't mean that the light will not shine after 200 meters. You have to get ahead again in order for it to shine extra 200 meters. So that is how light works. Okay, I'm connecting that to knowledge. When you are gaining knowledge, when you want to go ahead of time, what happens is that it doesn't become possible. So in learning, it is a systematic approach. But in order for you to be able to keep on going to any destination, you need to know and understand why and where the destination is. Then you begin your journey. So I want to be able to show you who that TP family can help, what is it that is going to do for you, and what you can become. Now, your becoming is the motivation behind why you will keep on coming to these master classes every single day as a trader or somebody who just wants to learn the things we teach here, because it goes beyond just trading. Number 1, one of the most important pillars, we have 5 pillars. One of the most important pillars here at TP family is TP Masterclass. Please write it down. Why am I saying write it down? Because you need to know. You don't need to waste your time and sit here for 1 hour, 2 hours listening to something if it doesn't convict you, if it doesn't have an idea of the goal. So number 1, TP Masterclass. That is the first pillar. Pillar number 1, TP Masterclass. Okay? Why am I calling it a pillar? You see, when you are building a house and you dig the foundation, there are pillars they put in the foundation. It is what holds the overall structure of the building. So pillars are very important regardless. So pillar number 1 is TP Masterclass. TP Masterclass is the foundation of your mindset reprogramming. So day in, day out, when you listen to the masterclass after we upload it again, when you keep on coming to the masterclass every single week, something is happening to you. Your mind is being reprogrammed. Does that make sense? You are listening to new information. It's challenging you. Because remember, I've told you guys before that there are 3 levels of education. If you don't go through these 3 levels, we can't call it education. Number 1 is unlearning. Number 2 is relearning. And number 3 is you keep on learning. I'm going to repeat it again. 3 levels of education. Unlearn, relearn, keep learning. So when you come to this masterclass, you position yourself as a student, and then you unlearn, to relearn, and to keep learning. So the first pillar is TP Masterclass. Second pillar is what we call, before we go to the second pillar, I want you to write this down. What would a TP Masterclass do for you? Number 1, it will help you to detach yourself from emotions and trade with a clear, disciplined mindset. Number 2, it will reprogram your subconscious mind. Number 3, it will build a strong trading culture for you. Okay, and then again, what did I say? I said, who are you going to become? If you follow TP Masterclass for a while now, you need to become a trader who is mentally stable. So that is my goal. So as you can see, some of the topics we teach about emotional intelligence, we are talking about financial thermostat. In the future, maybe 2-3 weeks later, we're going to be talking about cognitive biases. One of the most powerful reasons why traders keep on struggling to be profitable. Cognitive biases. So all the information that is coming on these masterclass, they are not just we don't know what to teach. It's a structured body of knowledge. Okay. So who are you going to become if you keep on listening to this segment? A trader who is mentally stable, okay, and emotionally controlled, no longer reacting impulsively to the market. That is my goal for you. And these master classes happen every single Saturday, 6 p.m. UK time here on YouTube, like what we're doing now. Number 2, what is a TP family going to do for you? Number 1, TP masterclass. Number 2, accountability program. Some of you guys have already been selected to the first ever onboarding team for the accountability program. What is the accountability program for? It's for people who are struggling to make withdrawals and people who are blowing their account. The accountability program is not to teach you how to trade as a beginner. It's to hold you accountable for those who are struggling in making withdrawals and people who keeps on blowing their account. Now, right now, we are doing a 90-day challenge first to help a group of people to be able to withdraw for the first time and stop them from blowing their account. But in the future, the accountability program is no more going to be about 90 days only, but rather a perpetual, consistently program that keeps on going. Okay, so pillar number 2 is our accountability systems or accountability program to hold you accountable. There is a whole big vision for that, and we'll talk about it later. Pillar number 3 is simulation programs. Simulation programs. This is the mindset shift. Some of the simulation program example is what you guys are seeing. Some of the audios you listen to when you're having a bad day. For example, myself, a couple of few days ago, I was having a very bad day in the market. Not that the market was punishing me or whatever. I just didn't feel the day. Have you ever woke up one day in the morning and nobody has done anything to you? You are just angry. You are irritated. You are just there. You are just worried. Things like that is not normal. You know, thoughts cannot defeat that moment. I always tell people this, that you don't beat your thought by thinking. You beat your thought by talking. I'm going to repeat it again. You don't beat your thought by thinking. You beat your thoughts by talking. That is why these programs of audios, and I say declare, it's not just something that you are playing. So for example, let's say you're having 3 losses in a row and you are angry. You don't go and sit down and think and go, oh man, you know what? I'm losing. While you are thinking, I remember from last week's masterclass, we spoke about emotional intelligence and we spoke about emotions. We said there are 2 types of emotions, complex emotions and basic emotions. That the complex emotion is what you don't want. And those ones, they do come from the basic emotions that are coming together, 1 or 2 or 3 of them. So while you are thinking that you are not a disciplined trader, and why did I take this trade? I regret, and so on and so forth. You are creating a complex thinking pattern. Do you with me? So in that moment, it is not your thinking that will help you, it's your talking. So if you don't know what you say, no problem. We do have simulation programs. The audios we make. Some of these simulation programs are going to be like 14 days fear breaker. So example like the 14 days fear breaker is coming soon. With this one, all you have to do is to follow the program. 14 days, everything the program tells you to do, do it. By the end of 14 days, something must break in you if it's regarding the area of fear. Now, you see, you don't need to believe this. It's just like the paracetamol analogy I always give to you guys. You don't pick up a paracetamol or a Panadol and go like, you know, a Panadol. When you go into my body, I want you to heal me of pain. Panadol knows what to do because of what we call in medicine mechanism of action. Because of the mechanism of action, you don't need to speak to the drug. It knows what to do. Same thing with what we are teaching you guys here. It's like a drug. It's like a drug. So day in, day out, while you are listening to these mindset shift programs, while you are just following the things we are telling you, something is happening to your mind day in, day out. Are you with me? Then number 4, pillar number 4 is what we call habit formation hub. Our habit formation pillar is to help those who struggle in reading. That is why we have book summaries segments. So if you are struggling to read, no problem. Join us. We have a group of people who are reading with you. We have a group of people who will come and then we are all reading together during the master classes. You are reading. But it's not just that. Even on our website, and the website is coming soon, you guys will see it. There is going to be a habit formation hub that will show you how to build any kind of habit that will help you to become a person. Before I go to the number 5 pillar, I want to repeat it again. Number one, TP Masterclass. Number two, what did I say? We have what we call the accountability program. Number three, we have our simulation program. And number four, habit formation hub. And number five, we have what we call the consultation with Cliff. Now, this one, we have not launched it yet. Some of you guys really want to talk to me. For example, there is a guy that messaged me on Instagram and the team reached out to me and said, Cliff, you got to talk to this individual. So this individual said all he wants is to hear my voice because he's going through something. Normally, I understand, but something touched my heart and I had to send this individual a voice note because of what he was going through. So because of the demand of people who say, Cliff, we want to talk to you one-on-one, we are creating another program that you can have the chance to consult with me directly one-on-one personally yourself without you always just need to watch me from here. So these are the 5 pillars of what you are going to experience in TP Masterclass. So when you come to the TP family. So when you come to the TP Masterclass and you see things like traders reading a book, don't go like, what are they doing? Because remember, as I told you this, the skill sets that you are trying to acquire, they only give you opportunities. But then what actually pays you in the market and in your life is your attitude. So the attitude part, we cannot neglect that part of your growth and only focus on how you can build an edge or how to analyze the market. So we are bringing a holistic structure of a body of knowledge that can be able to help you to become a trader. Now, if you understand the 5 pillars of the TP family, I want you to drop TP family in the comment section while we go on to today's lesson. Sometimes when you are basically building a community, it is important that you communicate the vision, you communicate the systems, they understand so that they can be able to get this. If you didn't get a lot of things, go back again and watch this video part and we'll take it out from there. With that all being said, ladies and gentlemen, today we are going back straight up into our lesson today. I call that emotional intelligence part 2. How many of you were blessed? Last week's session, we spoke about emotional intelligence. We broke down emotions and so on and so forth. If you were blessed, just let me know in the comment section right now. If you were blessed, let me know. If you were blessed, let me know. 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 If you were blessed. Today, I want wherever that you are right now, I want you to repeat it to yourself. Words are very powerful. I want you to repeat it to yourself that I will never leave this stream the same way I came. Tell yourself this. Declare that. Saturate your atmosphere that I will never leave this live stream the same way I came. I want you to declare it to yourself that I will never leave this live stream the same way I came. 3 times. I will never leave this live stream the same way I came. Today we are talking about something very important. The part 2 of the emotional intelligence. I titled this part emotional regulation. Please write it down. Emotional regulation, emotional intelligence part 2. Listen, guys, I want you to listen to me. I'm teaching now, so make sure you have your book and your pen. I'm teaching now. Listen to me carefully now, please. Emotions are not bad. Listen. Emotions are not bad. Are you with me? I want you to listen to this carefully, please. This is how I want you to see it. And what you are about to listen here, this is how it is. When true information comes into your mind, there is anything which is not true can do to you. Emotions are not something bad. And I'm going to use an analogy and an idea to communicate this effectively. As a human being, everybody on this live stream watching me under the sound of my voice, everybody, do listen to me carefully now. As a human being, from time to time again, you do go to the washroom to use it. Is that true? You go to the washroom and you use the washroom. Now, imagine you go to someone else's house and then for some reason you want to use the washroom, but you couldn't ask the person where the washroom is and you couldn't find where the washroom is. So you decided to do whatever you want to do in the living room. Now, whatever you did in the living room, whether you peed, that is not a problem. It is where you did it is the problem. But if you ask the individual, please, where can I find your washroom? And you do go to the washroom and do the same thing you did in the living room that was a problem. It now becomes a controlled behavior. Are you with me? So emotions, just like the same thing as you doing anything in the washroom, they can be a problem if it's not controlled, not eliminated, controlled, not eliminated, controlled, or in other words, regulate. So emotional regulation, listen to this carefully now. Before you understand why you need to regulate your emotions, we need to first of all understand the meaning of the word regulation. Regulation is a Latin word called regule. Are you with me? What that simply means is, number one, to control, number two, to direct, or number three, to keep in order. I'm going to repeat it again. The word regulation, there are three things that can define it. Number one, it means to control. So when you tell me, Cliff, control yourself, you are basically just indirectly telling me, Cliff, regulates. Whatever that you are doing right now that is not going well, regulates. Or direct. Or keep in order. I really want you to write these three words down. It's very important you understand that. Number one, control. Number two, direct. Number three, to keep in order. So when you hear the word regulate your emotions, it means, number one, control your emotions. Number two, direct your emotions. Number three, keep your emotions in order. Are you with me? So as a trader, if you say you are emotional and it's causing you a problem, listen to this carefully now. If a trader, you say you are emotional, it's not complete, because everybody is emotional, including traders. And you may have heard me say this before, and I want you to write this down to keep it up in your analogy. Everyone in the financial market, and I have our very first book that we are going to sell is coming up. And in this book, there is something very beautiful you're going to learn. I want you to write this down. Every single person in the financial market, whether it is being George Soros, as Kema was saying, whether it being Stanley Druckenmiller, Ray Dalio, whether it being Jim Simmons, every one of them, including your mentor, myself, we all get emotional. Everyone get emotional. The only difference right now in the space you are in the hierarchy of the financial market, is that when you get emotional, it affects your pockets. And when the big boys get emotional, it affects the market. So right now, if Trump is angry and Trump goes on Twitter and Trump tweets anything, it will affect the market. If Warren Buffett mistakenly jokes around and say, hey guys, I just literally just realized that Berkshire is losing 80 billion tomorrow. It is no more just a tweet. That is an emotional text that is going to affect the market. So everybody gets emotional. The only difference is that when you get emotional, I'm going to repeat it again, it affects your pocket. I want you to write it down in the comment that when I get emotional, it affects my pockets. So the problem is not the emotion itself. It is where the effect is going to is the problem. Are you with me? It's what there is a saying that you are not really humble when you are poor. It's only when you become rich and we know if you're actually humble or not. So, because when you are poor, sorry to say this, and you are proud, come on, you are causing yourself two troubles here. So all that you can do is just basically just put up a form of humility until 1 million comes into your pocket. Are you with me? So you need to understand that with all humility, accept the fact that your emotions affect the market, nothing. It only affects your pocket. So going back to regulation in emotions here, that you are going to get emotional. You are an emotional human being. There is nothing you can do about that. But number one, you need to know how to control. You need to know how to direct. And you need to know how to keep it in order. Regulation. Are you with me? So now that you understand the meaning of regulation, this is what I want you to understand. We spoke about financial thermostat the other day, but I'm bringing thermostat here. Regulation is like a thermostat. If you come into this room and you say, Cliff, the room is cold, I cannot entirely take the cold out of the room with thinking. There is something I need to do with the regulator. When I now switch the regulator to a certain higher dimension of degrees, it will start affecting the atmosphere and start either making it become hot or more cold, depending on what my preference is at that moment. So something is happening to the atmosphere because I'm doing something to a regulator. Are you with me? So remember the same thing here. When you are switching the regulator off to make the room come to a state of a temperature you want, it doesn't happen instantly. That is why we call it regulation. It has to adjust to a system and an infrastructure in order for you to get the results you're looking for. So if I start to turn the degrees in the room by the regulator from 15 degrees to, let's say, 20, it's not going to happen instantly and switch it out from 15 to 30 and you will feel it. But it doesn't mean I have not regulated it. So that is why sometimes if I say declare to yourself, I am great, I am great, I am great, what you don't know is that you think nothing is happening. Give it 3 minutes. Give it 3 minutes. The same way if you frown your face right now, you will think nothing is happening to you. Give it 3 minutes. Give it 3 minutes. Why am I saying 3 minutes? Remember, I told you guys that emotions are biochemical reactions in your body. That means while you are frowning your face, and the moment the chemicals are released into your body, such as maybe cortisols, it doesn't matter whether you are a good person or a bad person, the chemical is released into your body. So in this case right now, the same way, if you are trying to regulate the cortisols in order for you to become somebody who is no more stressed, it's not going to happen instantly, but give it 3 minutes, give it 5 minutes. So while you are losing the trade, 2 stop losses in a row, and you know that this trade is something that's going to make you money, but your rules is saying you have hit the 5% mark for the day, stay away. In that moment, you are not going to stop feeling taking the trade. You have to do something to your emotions. You have to keep it in order. One of the ways is to say things like, I know I am a profitable trader. Today, it didn't go well for me, but no problem. The market opportunities will come to me today or tomorrow. So I wait. I am a patient trader. The moves is not gone. The market is an 8 trillion, 7 trillion, whatever trillion in a day, and therefore there is a piece of the pie in the market for me. So now you see the knowledge about how big the financial market is right now. It's not just you to make money. You use that as a conviction to know that, man, there is money also in it for me. Now give it 3 minutes. While you are repeating that over and over again, before you could realize something is happening to you. So when you come onto this call right now, Cliff, I'm not happy. I don't even know how to smile. You may have heard me saying this before. No problem. Just show the corners of your lips like this and show your teeth. Now, while you are doing this, something is happening to your skin. Something is happening to your nerves. And while you are grinding your teeth and while you are doing this, it starts to release the waves with the biochemical reactions. You don't need to believe me for this to be true. Remember our analogy, like the Panadol. You don't need to speak to Panadol. It knows what to do. So while you are just showing your teeth like this, your body is receiving the information. Oh, okay, he is happy, he is happy, he is happy, he is happy. Before you can realize that stress is gone. Regulation. So if you guys understand this right now, we're going to go here. Why are humans designed to regulate emotions? Why is it that you cannot just turn off your stress, turn off your anger, turn off the revenge trading feeling? Why is it that as a human being, you need to regulate your emotions? We have established the point that you cannot eliminate emotions entirely. We have established the point that emotions is meant to be in you. Why? Because as a human, one of the tools you have and why you are still alive today is because emotions kept you alive. Are you with me? So emotions in human is for survival. So when you go into the market, and you see the market as an enemy, what do you think your brain will do? It will protect you for the enemy. So if the market is taking your money away from you and you are here and you still think stop losses are bad, the market will protect you from stop losses. And that is where your cognitive biases will lead to loss aversion. Because loss aversion, remember the definition, is the tendency or your desire of not wanting to lose being greater than your desire to gain. So that simply means you rather hold on to $100 pick pullback than to cut it at 20 and look for the move and catch 80. Cognitive bias. Why? You don't want to lose. The brain is protecting you from losing. So as a human being, the reason why emotions can't go away, it is what keeps you alive. is your survival mechanism too. Are you with me? Now, fear will keep you away from hurting yourself. Anger protects you from what? From losing. So anger is an emotion that makes you survive. So for example, it is the same anger that if you are poor or you are broke, and how many times have you reached a point where you have zero money on you, and that moment was the time that you were so angry that you told yourself that I will take life seriously? Now that anger right there, even though anger is not right, but that anger was meant to be in you to be able to keep things in order in your life. You are so angry in your life that you don't have much, because you see, it's not that people hate the fact that they don't have money. Let me tell you something. You know what is really painful? What is painful about lack? It's not the fact that you don't have. What is painful about lack is that you don't have at the right time. Imagine if right now you have a loved one who is sick, and if you don't get to have money for the individual today, unfortunately, they may lose their life. And if somebody gives you the money 2 weeks later, there is no way you'll be happy about that money. So lack, the reason why it is important, you become so angry this year and vow to yourself that by hook or crook, my life must change. It's not because you want to buy the Lamborghini or the Rolls Royce, but because lack is a very serious, sad situation to be in. It makes you paralyzed. So while you are there and you beg that friend, and that friend said, I can't help you, let that anger push you. So while you are here on this masterclass, you are not just listening, you are listening to be transformed to become a better person. Does that make sense? So it is that anger. Number 3, the same way happiness and love also ensure your survival. Did you know that if the emotions of happiness and love is not in you, you can't bond with anyone? Do you know what it will cause if you don't have those emotions? Loneliness. Without your ability to bond, you will be lonely, and loneliness will lead to serious things. So emotions is for your human survival. It is what makes you who you are. So let's establish that point, that you cannot be able to eliminate it from your life entirely, but you have to. Number 1, please give me the 3 levels of what you use to regulate. I told you guys. Number 1, let's put in a comment section right now. I want to make sure that you guys are listening. So I said when we talk about to regulate, there are 3 things that needs to come into your mind. Can we put in the comment section right now? There are 3 things that need to come to your mind. That's right. You need to be able to know how to control. You need to be able to know how to keep in order. And you need to be able to know how to direct. So the next time that somebody asks you, hey, how do you control your emotions? You go like, I know how to control. I know how to keep in order. And I know how to direct. We'll come to those things. Just keep it in mind. It's very important. Now, before we talk about this, there are 4 types of humans you need to know when it comes to emotional control. There are 4 types of humans when it comes to emotions. I call the first one the emotional reactor. The emotional reactor. The emotional reactor. The emotional reactor. Number 1. You guys say you like it when I write here. I'm going to write on the screen, so I'm coming. We have the one that we call the emotional reactor. I'm going to bring my screen soon. Give me a second. Are you guys learning? If you are learning, put in the comment, I am learning. If you are learning, put in the comments, I am learning. If you are learning, put in the comments, I am learning. I am learning. The 4 types of humans based on emotional control. Based on emotional control. Let me share my screen. Are you learning? Let's learn. Based on emotional control, these are the 4 types of humans. These are the 4 types of humans. Number 1, I call them the emotional reactor. Number 1, I call them the emotional reactor. The emotional reactor. Number one, the emotional reactor. Are you with me? The emotional reactor is the type of a trader or a human being who has no control over their emotions. Their decisions are based on greed, FOMO, fear, impulse. They are just there. So anytime you find yourself over leveraging, revenge trading, removing your stop losses, you need to know you have entered into a type of a trader or a human being we will categorize as the emotional reactor. Okay? People like this, the way the market gets them is by, flashy price move, or maybe new spikes, or maybe they think, oh, the market is leaving me behind. Those people, they don't know how to react. They are basically just allowing the market to just control them by heart. The second type of person is what we call the emotional suppressor. This one is the one that makes people think that if they can suppress their emotions, it means that they are better. The emotional suppressor. The emotional suppressor. This is the kind of person that is saying, hey, you know what? For me, I know I am emotional, but I don't care. I'm just going to ignore it. Remember, you cannot beat emotions by letting it run wild. You regulate. And what does that mean? Control, keep in order, direct. So the person that is saying, hey, for me, I'm going to ignore that the emotions exist in the first place. Okay, I'm going to pretend they don't even exist. So they suppress their emotions until they explode into overtrading or they quit trading. So this type of people, they are the ones that you will meet them 2 weeks later and be like, for me, that trading thing, just leave it. It's not even for me. Because they don't want to understand that they needed to control their emotions and not suppress it. So if you suppress it, one day it will cause a bigger problem. Are you with me? Now, how do they trade? They force themselves to follow rules. They think that forcing themselves to follow rules means they are a disciplined trader. It's not true. You need to be aware of what can cause you to explode in emotion. Remember, I said emotional intelligence is the ability for you to be aware of the emotions. Emotional intelligence is not somebody who is basically saying, hey, I don't care about emotions. It's not true. You need to be aware. For example, me, Cliff, I've told you guys this. Every single time I am making more money, those days, and even now, still now, whenever I know that I've made good money, I need to stay away. If I don't stay away, trouble is coming. Because I'm so excited, I might end up blowing it, blowing the profit I made. Does that make sense? So you need to know yourself. So Cliff, do you mean you are still emotional? I am still emotional. I'm a human being. What do you expect? But I am not emotionally unintelligent. I am aware of myself. So is the big boys. So the emotional suppressor is the one that pretends they are not emotional and they force themselves to follow rules without self-awareness. Do you know how the market manipulate them? The market manipulate them by trapping them in slow ranging markets. Those people, they normally lose money in when the market is consolidating. Instead of them knowing how to follow their plan for real and knowing themselves, they don't do that. So they pretend they are following their trading plan. They pretend they are emotionally aware until ranging markets and consolidation blows the account. Yes, because you can't suppress emotions forever. For example, if right now I come to you and I tell you, hey, big head, hey, big head, hey, big head. You will receive the big head to the extent of how full you are in your stomach. The day that you are hungry and you don't have money, that same big head that you were pretending you liked one day will explode in my face. Are you with me? So you can't pretend to suppress emotions forever. You need to be aware of your emotions. Number 3 is the emotional observer. So number 3 is the emotional observer. Number 3 is the emotional observer. The emotional observer. Who is an emotional observer? He's the one, he's aware of their emotions, but they cannot control it. They are aware. They know. They will say things like, me, if you're not careful with me, I get very angry very easily, so be careful. They know. But while they are telling you they get angry easily, be ready because they are almost about to beat you. It doesn't mean they're going to control the fact that they know that they are angry easily. They are going to beat you. They're either going to fight or they're going to say something that will make you angry as well. So, sorry, people like that, they are aware of their emotions but struggles to control them. So they understand FOMO. As soon as you say FOMO, they end it with the full meaning. FOMO, fear of missing out. You understand? You know, they can even tell, oh yeah, FOMO. People who are FOMO, they are funny. He knows what FOMO is. You know, when you talk about greed, you'll be like, yeah, greediness is a spirit. They will tell you fear. Bro, for me, the market, it can really shake people. They know these things by their names. They know what they can do, but they still react impulsively. Okay, so they know, you know how they trade. The thing is, they follow 70% of the time, but then when they break their rules, it clears all the profits. That is the emotional observer. So they are like people where, have you realized the people where they know how to play football than everyone on the pitch because they sit at the sidelines? They can tell you how they would have played that football. They would tell you how they would have managed the company. They would have told you how they would have even married your wife or your husband. But put them in a marriage, put them on the pitch, put them in the business. There you will know they can't do anything. They are observers. They really know how to observe everything, except when it comes to the time they need to apply it in their own life. So they are called emotional observers. How does the market manipulate them? It uses minor putbacks to test their discipline and patience. Okay? Now, the last one is called the emotionally regulated. This is the one that you're trying to become. Emotionally regulated. Emotionally regulated. This is the one you're trying to become. You're trying to become emotionally regulated. What type of an emotional trader is this? He is the one that recognizes their emotions, and he knows that without tools, they cannot be able to manage or regulate their emotions. So they are aware, they have the tools, and then they use them. Emotionally regulated. They wait for setups, they follow a process, they never get emotional over wins or losses. They made money, same face. They lost money, same face. Are you with me? So this is the level of an emotional intelligence you want to get to. Okay? Now, the next thing we're going to be talking about now is that how then are you going to be able to regulate your emotion? But before we talk about that, I want to tell you guys something right now. I want you to write down something very powerful I wrote down here. I wrote down something here today, and I want you guys to just flow with me. Okay? FOMO, I want you to write this down. FOMO plus greed is equal to something. I want you to be aware of what these emotions can do to a trader. Okay? I want you to be aware. FOMO plus greed will only trap the trader. Please write this down. FOMO and greed will trap the trader. Fear-based emotions, fear-based emotions. When I say fear-based emotions, is when you are basically trying to enter a trade and you are afraid, what if? So you place your stop loss in an area, or you don't know what you are doing. So what will happen is that you will be hunted. If you trade with fear all the time, you will be hunted. When the market is slow, it's going to look for traders who are bored. And what will happen is it will frustrate them to be able to take bad trades. So if trading is all that you do, you have a problem here. So when I hear people saying that, I ask them, what do you do? I'm only a trader. It's not good news. You are in trouble. If trading is all that you do, you're in trouble. You need to have other life outside trading. Okay? If trading is all that you do, you are in trouble. You need to find some hobby because you'll be bored and you will take bad trades. So number one, FOMO, fear-based, and then slow. Then we have the last emotion that the market used to manipulate. It's called revenge loops. Revenge loops. What is revenge loops? What revenge loops does is that it will create losses that makes you want to take back. Can I give you an example? Let me give you an example. Type of the revenge loops is the type of loss that the market breaks this way. It normally happens to people. It normally happens to people that trade break and retest strategies, support and resistance, break and retest. So it will break the zone, and then they want to take the trade here. So they buy it here. They don't wait for confirmation. And then it comes here. It kicks you out. And then it goes here again. And then they enter again from here. Sorry, guys. I'm so sorry about this. And then it goes to the pot here. And then they enter late again. Because that moment you're not thinking, you think, oh, it's going. Then it come back here again. And then it kicks you out. Then it goes back here again. All right. And you are so angry that instead of you letting it go, you are still going to try to catch some small pips and quickly. And as soon as you enter, it pulls back small and you are afraid. What if it comes back down? So now there is something in cognitive bias called anchor bias. Anchor bias is when your brain hooks up to a certain bias that you cannot be able to separate your emotions and your analysis from. So you are hooked, you are anchored. Now you are going to be like, oh man, you know what? So before you can realize, the market has manipulated you in a way. And then finally, when you are now saying, you know what, I'm going to sit this one out, you now start to see the trading view alerts triggering. Bing, bing, and it will send you a message, TP2 hit. And then now, tomorrow, you are so weak, you don't know if you should go into the market anymore. And now the market is going to find itself consolidating. Now, instead of you waiting and staying away from the market because of yesterday's emotion, which is still within you, tomorrow's trade situation is still the same, even though the day is different. In you is the same. So now you want to make money quick. So you are trying to catch the top and down in between. People like that, they call it ping pong. They are playing ping pong, yeah? So they want to catch the up, they want to catch the down. But before you can realize what is happening right now is that you are still losing unnecessary money, right? Instead of you staying away to wait for it to either create a base, all right, then drop, or maybe a base and another rally, depending on the market cycle that you have seen that moment. So you get caught up in this loop. Now listen to this carefully, guys. You see what I'm just showing you here? If the market catches you here and do this to you and do that to you and do this to you, what you need is a minimum of at least 72 hours, 48 hours. If you don't take 48 hours to 72 hours to reflect, you will be caught up in this loop for a very long time. This is what causes what we call losing streak. This is what causes what we call losing streak. Losing streak. The same scenario of a flow is what also causes a winning streak. Are you with me? The same way this pattern causes a losing streak, this same pattern also causes a winning streak. Have you ever been in the market in such a way that there are months or weeks, man, you are on fire. You are just on fire. That moment, if they call you by your name, you get angry. You want them to call you Warren Buffett in a new age. All right? Or Jim Simmons II. You are on fire. That moment, that is when you start telling people, listen, I think I need to teach my strategy. My strategy is the number one. That week you are on fire. It is not you. It is that you. It's not your strategy. It's you that have entered into a loop that you are seeing what the market is doing. So you take your time. You hit. You take your time. You hit. The same scenario can happen to you in a losing streak. Are you with me? How did I get here? Okay, let's continue. Let's continue. Are you guys with me now? So now that you know these type of manipulation in others, the next thing I want to talk to you about, and I want you to write this down, is the 3 levels of emotional regulation in trading. 3 levels. Before I go on, are you guys learning anything? If you guys are learning, drop some number ones in the chat for me to see. 3 levels of emotional regulation in trading. I'm about to give you something very, very powerful. I'm about to give you something very powerful that will help you as an emotional trader. And I want you to start telling yourself right now that my life as a trader is changing. Tell yourself, repeat it 5 times, please. That my life as a trader is changing. My life as a trader is changing. Repeat it to yourself. My life as a trader is changing. My life as a trader is changing. My life as a trader is changing. Okay? Whatever losses you have had last week, no problem. If NFP bullied you, no problem. Okay? If this month you have made no money, no problem. If last month you lost the money somebody borrowed you to trade, no problem. Still repeat it to yourself. My life as a trader is changing. Okay? 3 levels of emotional regulation in trading. Level number 1. My life is changing as a trader. I call this the pre-trade regulation. You want to control your emotions. You want to direct your emotions. You want to keep it in order. Remember, now that we're about to talk about the 3 levels of regulation, I want you to keep this in mind. Control. To control something means not to eliminate it. To control something means to make sure that you adjust, to make sure that okay, control. So it's like driving. When you are controlling the steering wheel, okay, there is a level of precision. So to control means that you need to understand the knowledge behind the right, precise things you need to control, whatever you're controlling. So if you are driving, you can't just turn the steering wheel all the way to the 90 degrees. You are controlling the steering wheel, but it will cause you a problem. Are you with me? So control, keep in order, and then what? To control and then direct. Okay? These are the 3 things we are going to use to talk about the 3 levels of emotional regulation. It's called the pre-trade. So now you're going to understand what we say pre-trading routine. A lot of people, when they hear pre-trading routine, all they do is, okay, I'm looking at the market. I'm marking out my charts. Oh, okay. Psychology has been ignored for a long time in trading. Pre-trade routine. Some of you, when you wake up and you go to the London session, I made this video one time and people were like, what is Cliff talking about? I said some of you need to stop eating banku and kenke in the morning or egusi and eba during London session. If you are eating egusi and eba or you are eating banku and kenke in the morning before you go to London session, what makes you think that you can see that double bottoms clearly? What makes you think that that is a fair value gap? You are already sleeping. You're already sluggish. And you're like, this guy is doing the most. I'm doing the most. Okay. Some of you guys need to drink water before you trade, because your dehydration alone is causing your brain to be tired before you make decisions. You will not believe me, but it's okay. Remember, just like the Panadol, just like the information sinking. Okay? Some of you guys need to eat as simple as banana before you trade in the morning. As simple as banana. Cliff, why banana? Banana is a stress regulator. It reduces cortisols. So if just by you eating 2 bananas in the morning before you trade alone or before the New York session can do something for you. You won't believe me, just try it. Anyway, pre-trading regulation. Before you enter the market, you need to be able to create what we call pre-trade routine. The reason why you need a pre-trade routine is because you want to be able to make sure mentally you are fine. You see, it is only traders that do not fix their mind before. Have you ever seen some of these footballers who are about to play a game? Cristiano Ronaldo and all these guys, they regulate their emotions before they get onto the pitch. It's only traders that think that psychology is stupid. Anyways, you need a pre-trade regulation. What are you doing? You are regulating your emotions. 3 things I will give it to you right now. You need to breathe. 3 things. Number 1, breathe. Breathe. Let's do something right now. Can the media play me some of the instrumental and make sure it goes high? We're going to do something right now. And I want every single person to do with me. Just let it come up right now. Let it come up. Play me some instruments or whatever, anything that is a slow pace music. And increase it a little bit. As it's playing right now, and if you can hear my voice still playing, okay, if you can hear my voice, just drop some amounts in the chat if you can hear my voice in the midst of the audio, okay, because I want to use it for something. When we say pre-trade routine, listen to this carefully. We are about to do a 7-8 4-7-8 breathing technique. Some of you guys won't survive, but it's okay. 4-7-8 breathing technique. 4-7-8. 4-7-8 breathing technique is going to do something to you. Why? Can you guys still hear me loud and clear? Can you guys hear me loud and clear? Okay, let's roll. Let's roll. Come on. Set the pace. Tell everybody, give me space. I'm about to breathe. 4-7-8 breathing technique. We are going to breathe in. In fact, all my team members who are at the backstage, I want you guys to do with me, okay? Let's all do it. Let's set the tone. So we're going to breathe in 4 seconds. We are going to hold the breath 7 seconds. Hold. And we are going to do what? We're going to breathe out 8 seconds. And we are doing it for 1 minute. Okay? So if you are ready, let's go. I want you to breathe in 4 seconds. Now I want you to hold. I want you to hold. Now I want you to breathe out. What we are doing is not yoga. What we are doing is called meditation. It's called breathing exercise. This became very important during the COVID. If you stop, there isn't enough oxygen in your brain, depending on the room you are in. If you have the right roof or the right meditation, so the oxygen going into your brain is making you exhausted. So in that moment, you are regulating your brain. So breathe in. I want you guys to listen to the sound of my voice. Breathe in again, 4 seconds. Breathe in. Breathe in. Now hold your breath. Hold it. Let your stomach feel like the air is in your stomach. Hold it. Hold it. 3 seconds more. Hold it. Now I want you to breathe out. If you're doing it well, you will start to feel a sensation around your head. What is happening? Air turning into an oxygen is going into your brain. You need it. You need it. You need it. This is not magic or whatever. This is science. This is important. You need to breathe. That is why sometimes when you see the people who work out, when they don't breathe in well, they faint. When they are working out massively, you need to breathe. So during your pre-training routine, I want you guys to keep on breathing. We have 30 seconds to go. So I'm going to keep quiet. Okay, I'm going to keep quiet now. And I want you to keep on breathing in and breathing out. Okay, if you are struggling with a 4-7-8, okay, you can do 2-3-5. Okay, 2-3-5. Okay, 4-7-8 is sometimes difficult. People cannot hold breath for 7 seconds. You know, I pray that may God give you strong lungs. 4 seconds in, last one. Let's do the last one. 4 seconds. Hold. Hold. 4 seconds more. Hold. Now I want you to breathe out. Okay, thank you so much, PDI. Can we bring the music down now? Listen, guys, look. Listen. What you are doing right now, the Bible says something that the things of the spirit is foolishness to the natural man. What you are doing right now as a human being, God gave you nose for a reason. He gave it to you to breathe. He gave it to you for good air to enter, so that the air that is entering through your nostrils will do something to your brain. Are you with me? So now, number one, some of the pre-trading routine is you have to breathe. So you can say every single time I wake up in the morning or before a trading session, I will do a 4-7-8 breathing technique. 5 minutes. 5 minutes. Just breathe. Remember, again, just like the Panadol, you don't need to tell it what you want. Just do it. 4-7-8 or 2-3-5. Breathe. Breathe. Then number two is you need to check your emotional state. You pick up your journal. How do I feel? How do I feel? I'm happy. I'm sad. Now, when you write every emotions you feel at that moment down, and you think they are all negative, what do? Let me see if TP family is really TP family. Imagine you write negative thoughts you are feeling. Okay? Negative thought. You wrote it down. You are not lying to yourself. Remember, emotional intelligence is self-awareness. Self-awareness is not self-lying. You don't need to lie to yourself. If you are hungry, write it down. I'm hungry. If you are angry, you say, I'm angry. Why are you angry? The person who owes me money is not, he doesn't want to give it to me. You are angry, write it down. Now, when you are able to discover these emotions that you are feeling, what do? Let's go into the comments. What do? What do? If you are feeling emotions, what do? Speak affirmations. Don't stay away, guys. If you are basically feeling that, the next thing that you do is you counter attack. Don't let that thought go away. Counter attack it. So if you are saying that I am sad today, what do you say to yourself out of your mouth? Because the thought cannot be beaten by thinking. The thought will be beaten by talking. Remember, you beat a thought by talking, not by thinking. So if you are saying, I don't know why I am sad, what do you say? What do? You need to counter attack it. I am great. I am great. And just like a drug, give it 3 minutes. Immediately something starts to happen to your emotions. You don't need to know why. It's called biochemical reaction. Emotions. Does that make sense? So, number one, pre-trading routine. Cliff, what do I do when I wake up? Number one, have some time to breathe. Make sure your environment is beautiful. You don't have any negativity things. Number two, write down how you feel. If it's all positive, still write it down and repeat it. If it's negative, write it down and counter attack it. Don't let it go. See, don't let negative emotions stay. If you let negative emotions stay, you are in trouble. Counter attack it. Then number three, you now write down the trade plan, your stop loss, your take profit. So you see, it's not just psychology, but it starts from the right mindset. Then it moves to your edge. It moves to your hypothesis. I will enter here. I will get out there. I will stay out here and I will stay in there. Trade plan. Okay? So that you can be able to know that are you entering trades in a controlled state or you are entering them emotionally. So that is your level number one, pre-trade regulation. Then the second level is what we call the in-trade regulation. Let's go back to this. Second level, in-trade. In-trade regulation. In-trade regulation. In-trade regulation. In-trade regulation. What is an in-trade regulation? Your goal is to make sure that the trade you have entered or during a session, emotions will not hijack you. One of the ways you can start that is some of you guys need to practice what we call set and forget. Set and forget. If by this time in your career, you are still opening your trading view or your MT5 account and you open it with one eye open, closed like this, and then you are trying to look into it through your fingers, you are joking. You are not a trader yet. So detach yourself from your P&L, profit and loss. Detach yourself from it. Okay? So during that time, the things you can do is just hide your P&L. Don't look at it. Don't look at it. Don't look at it. You see, I will come to something. When we get to cognitive biases, I will teach you guys something very powerful. Something very powerful you guys have not thought about before. That will change. After the cognitive biases, some of you guys will go back and use the knowledge to change your trading view settings. After the cognitive biases lessons, some of you guys will go back to your trading view and you will change your trading view settings. You will not use any colors anymore on your trading view again. Anyways, we'll get there. So what are we talking about? Hide your P&L. If your P&L affects you emotionally, hide it. Number 2, as I said, set and forget. Once you have set your take profit and your stop loss, forget it. Let it hit one of them. Okay, if you have a break even, whatever you want to use, you can do that, but set and forget. Then you need to basically, one of the strategies you can use during an in-trade regulation is if you want to check the trades, set time-based check-ins. Maybe you will tell yourself, I will only check my trade every 1 hour only. Practice it, 1 hour. If it is not an hour, I will not check the trade. It will make you, and you see sometimes some of you guys, and that is why, the accountability program, I asked the team to ask the people, what device do you trade on? Some of you guys are going to have to start trading on your laptop only. Some of you guys are blowing your account because you trade on your phone. So even when sometimes you go to the bank and then you are bored, or you are in a queue buying food and you are bored and you pick up your phone, because trading is all that you do, you are going to go to TradingView and you will see a very, 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 very trickish move. And your brain, which is so much always letting you see what you want to see, will tell you, what if gold goes? What if GBP USD flies? Right? It's going to use your key terms. Then you now enter a trade you didn't even plan to take. Not because you wanted to trade, but because that is all that there was there to do. So some of you guys will need to delete the app from your phone and start using your laptop. Or if you don't have a laptop, delete it anytime you don't have a session for at least a couple of few months before you come back again. So number 1, level number 2 is in-trade regulation. While you are in a trade, what do? You either hide your P&L, you have a no-touch rule, set and forget. Number 3, use time-based check-ins. What are we talking about? Number 1, we started from what? Pre-trade regulation. Remember what I said here? I said number 1, what are we doing here? We said that we are going to basically do what we call control, keep in order, and direct. So every single time you are doing the pre-trade regulation, what are you doing? You are keeping your emotions in order. I told you your life will not remain the same again after this emotional intelligence call. What are you doing during the pre-trade regulation? You are keeping your emotions in order. Are you with me? What do you do in the in-trade regulation? Can somebody tell me, where would we connect that to? Let me see in the comment section right now. Where do we connect the in-trade to? Where do we connect it? Let me see in the comment right now. Where would we connect it to? When it comes to the in-trade, what do we do? If we are connecting the pre-trade regulation to keep in order, the in-trade regulation, what will happen? Let me see in the comment. No, I mean in terms of this, guys. Look at this. This is what I'm saying. Here. Look at this. Look at these 3 things. So number 1, the pre-trade regulation is in keep in order. The in-trade regulation will go to what? Between control and direct. Which one will be for the in-trade regulation? So while you are in the trade and you are trading, what are you doing to your emotions to survive? What do you need to do? You need to control your emotions. So when you are in the trade, you control. When you are about to trade, you keep in order. When you are about to do what again? The next one is what we call the post-trade regulation. It is the post-trade regulation is where you are going to direct, because right now you are finished trading. So the emotions that you feel, whether it is about wins or losses, you need to put it somewhere. You're going to put it either in your hobby, or you're going to put it either in your, in the things you love to do, whether you love to cook, whatever it is, you're going to do that. So this one is what we call the third level, is what we call the post-trade regulation. Post simply means after something. In pre means before something. So pre means before something. Post means after something. So post trading or trade regulation. Okay. So these are the 3 levels. 3 levels of emotional regulation. Number 1, pre-trade regulation. What do? Set the atmosphere right for you. When you are in a trade, what do? Keep some systems around that will help you as well. Number 3, post-trade regulation. Post-trade regulation is very simple. Take breaks. Okay, step away. After you have been able to make sure you have hit your targets or your losses, step away. These are tools. What I'm giving to you guys is not just something that you do, it's a tool. It's supposed to be part of your trading whole entire structure. Okay? Take 5 minutes break or 1 hour, whatever. And then number 3, you journal your emotions. Then number 3, you celebrate good decisions, not just wins. What is a good decision in trading? A good decision in trading is not what ended up in profit. A good decision in trading is what you did that you said you would do. Your trading plan. Are you with me? So now I want to be able to show you guys something right now. Let me go into the comment section right now. Let's say there is somebody. John is a very, very used name on every single thing. So let's say John is a trader. Okay, let's say John is a trader. Okay, this is John. John wakes up early in the morning. Okay, John wakes up early in the morning. When John wakes up, what am I doing? Am I trying to draw a human being? Okay, hold on. John wakes up early in the morning. He is smiling. Or John wakes up early in the morning and he is sad. Or John wakes up early in the morning and he is sad. Whichever this one is, no problem. He can still regulate his emotions. So what does John do? As a trader, John is going to wake up. He's either going to pray, read his Bible, read his book, whatever it is that he does in the morning. Now, 30 minutes or 15 minutes or 30 minutes before trading session, John has a trading routine. What is that trading routine? John decides to make sure at least as soon as he wakes up, he drinks a minimum of 500 ml of water. Why do you need to drink 500 ml of water at least? Because it will keep you hydrated. If you are hydrated, you think differently. Then John now walks into his trading room or his trading desk. What does he do? He tries to sit down to make sure that he is going to basically control or regulate his emotions by keeping things in order. So he starts a breathing technique, or he decides to be very mindful. He plays some of our audios, all right, some of the audios that is on our channel. He listens to it. What he's doing right there is that he's preparing his mind for a battlefield. You see, in trading, listen to me carefully, guys. Trading is like boxing. Trading is like boxing. Trading is like being in the boxing ring. No matter what you do, you are going to get punches. No matter what you do. Your goal is to make sure you don't get knocked out. So, as a trader, you are going to get losses. Your goal is to make sure you don't get knocked out. It's called live to trade another day. So the reason why you are keeping your mind in order is so that you can be able to make the right decisions. Why? Because the average mindset you have as a trader is everything opposite to who a trader's mindset or to what a trader's mindset is meant to be. So that means you, the average individual right now. One thing you need to be able to understand is this, is that you cannot, and you probably even wouldn't want to make more than 2 emotional decisions in a day, unless your brain is highly structured in a way that you follow a specific pattern of routines. So John wakes up in the morning, he goes into his trading room, he keeps himself on the right pace, right? He thinks about things that is positive. He writes down his affirmations and he declares them. He picks up his goal card and he reads it. My goal is to make sure I make the right decisions in the market. Now, while John is in the market, what is he doing? He's not looking at the chart. He has picked his book. Like the book we are reading, he picks it up. What does he do? He's reading a chapter while he has set the trade. Why is John so comfortable not worrying about the trade? Because he has followed his trading plan. So because of that, he's not emotional. He didn't enter 1.00 on a $1,000 account trading gold. So he's not worried. He knows even if the market pulls up his stop loss, he already knows how much he's going to lose. So what is the worst thing that could happen? He already understands a stop loss is a stop trade. He already understands a stop loss is a stop trade. Does that make sense, guys? He already understands that a stop loss is a stop trade. He already understands that the stop loss is a stop trade. So he's not seeing stop losses as something negative. He has realized that if it stopped me out, it means I stopped the loss. Okay, so what is happening right there? Now he's no more emotional in that trade. His loss size is good. Okay, he's following his trading strategy, he's following his trading plans, everything is on point. Okay, then after he is done trading that day, what does he do? He goes back and he reflects on the decisions he made. He journals his emotions, all right, whether good or bad, he journals it all, and then he keeps it in track record to study the pattern of his emotions. And what happens next again? He now step away. Does that make sense? So this is the general routine that a trader is meant to behave. Now listen to me, guys. I want to share something with you right now that a lot of people don't talk about mostly. Listen to me carefully now. We are about to wrap up, and I want you guys to listen to me. Listen to me carefully. We are about to wrap up. Listen to me carefully. When it comes to trading, I've heard many people saying this, that they want to start trading so that they can fire their boss, or they want to start trading to become their own boss. I understand what that means, but a lot of people have not come to the realization of the reality of that sentence. In trading, nobody is going to wake you up and tell you do 4, 7, 8 routine. Because if this was a job, the person who is responsible for telling you to do your 4, 7, 8 routine at a job will probably be the admin in the company. Is that true? So that means in trading, you are going to have to be your own admin. Number one, your own administrator. Number one, or your own human resource. Then nobody is going to tell you to manage well. That means you need to be your own financial advisor. Now, it is your financial advising understanding that will tell you. People sometimes ask me, Cliff, why do you think that we need the right understanding about this financial advising thing? Because it is your financial advisor, which is you yourself, that will be able to choose capital management rights. Listen to this carefully now. Capital management rights. What is capital management? Capital management is not risk management. Capital management is you understanding, all my life, all I have is $500. If I put all the $500 in the account, I'll be emotional. So I will put $50. So you don't select the amount of money you want to deposit because you want to make more. You select the amount of money you want to deposit into your account based on if you are willing to lose it. You have advised yourself. If I lose this money, it's okay. So that means you have to be your own financial advisor. Is that true? Number 3, you have to be your own director. That means you need to know, I've been trading on my phone for a long time. It's giving me a couple of few wins here and there. But now that I've been able to make some money here and there, I need to be able to make sure that I buy a laptop. I'm investing into my business to grow. The director is the one that will give you that knowledge, which is yourself. Number 4, you need to become your own motivator. In other words, somebody who is in the business, who believes in the vision, is yourself. Listen, guys, I'm listing this thing for you to understand why trading is not complicated, but it gets difficult. It gets difficult because when I hear people sometimes say that I want to be my own boss, I get it, but you have not gotten it yet. It means that you are going to have to be your own admin. You're going to have to be your own financial advisor. You're going to have to be your own director. You're going to have to be your own motivator. That means nobody's going to come and wake you up at 5:30 or 6 a.m. and tell you, listen, you got to do your morning routine today. If you trade under your bed in your blanket, it's your fault. You're going to face the consequences sooner or later. Does that make sense? But only you can tell yourself that. So ladies and gentlemen, listen carefully now. If you want to become emotionally intelligent, you need to understand that this industry, what did I say in the beginning? That if you get emotional, it affects your pocket. If the big boys get emotional, it affects the market. So everybody gets emotional one way or the other. You are also going to get emotional. You don't have a choice. So you need to start respecting the hierarchy. Now your emotions doesn't carry weight in the industry. It doesn't carry weight in the market. So what do you need to do? You need to have a ritual, a system, how you wake up, the things you do, and so on and so forth. The things you listen to. Remember the financial thermostat? We spoke about the mind portals. We spoke about the visual portal, the auditory portal, your imagination, your mouth, and then your heart. These are the mind portals. that you have. So when you wake up in the morning, the things you look at before you trade will affect you during trading. The things you listen to before you trade will affect you in trading. The things you think about, your imagination, whatsoever is true, whatsoever is pure, whatsoever is lovely, if there is be any virtue, these are the things you need to meditate on. Then the things that you think about while you are alone. Oh man, I don't think I can be rich. Cast that voice out. I am a millionaire. Even though you have not seen millions yet. Because remember, if I give you millions of dollars, you are not a millionaire. You just have millions. Your financial thermostat, which is a law, will design a series of life events to take it all away from you to remain what you can manage, keep, and handle. So ladies and gentlemen, we spoke about emotional intelligence and broke down the difference between emotions last week. What did we say today? Today we spoke about emotional intelligence regulation parts. Every single thing that I've taught you here today, they are tools. Go back, watch this masterclass again, watch them, and then write the tools down. Write the tools down and structure the tools into your trading. Some of you guys listening to me right now, you work. And sometimes while you are at your job, the market is about to hit your zone. And there is nothing you can do about that. These things are called the realities of life. If you are busy, you are busy. If you allow yourself to think, oh my God, I need to be able to know, you have to now sacrifice and trade at the right session that you can have time, or during your off days of your work, you trade. People sometimes say, Cliff, how can I work and trade? You can't. You can only trade when you are not working. So either your off days or your closing time, either Asian session or New York session, depending on your time zone. It's as simple as that. I'm not coming here to lie to you and tell you, oh, you can be at your office and put in the trades. You will be distracted, or your boss will fire you at some point. So realities of life. Let's start to make trading and respect trading. It's a business. If you understand it and you have the right tools, eventually you will become successful. Ladies and gentlemen, I don't know about you, but just let me know in the comment section right now if you have learned something today. Let us start wrapping up. Next week, we are going to start another powerful topic. You don't want to miss it. You don't want your trader friends to miss it. And you don't want the person that you don't even like, that you know he's a trader and he's not making money, to miss it. So just make sure you invite people after this segment. Share this link of this masterclass to people to also watch it as well, and let them also learn something. If you have learned something today, let me know in the comment section, please. Drop some number ones in the chat and let me know if you have learned something today while we are wrapping up. If you have learned something today, drop some things in the chat. Please make sure that you write down every single thing that is in these tools. Write them down. They are tools, they are keys. Okay? Regulating emotions comes with tools. You cannot regulate something that you don't have the tool of. It's as simple as that. Does that make sense? Okay. Ladies and gentlemen, with that all being said, thank you so much, guys. I really, really, really have so much love for the TP family. It's what we do. There is so much good news coming, and I want you guys to be excited about it as well. God bless you. Thank you so much, and have an amazing evening. I will see you guys on the next episode. Take care.
Trading is a mind game.